A 100% deposit bonus. Octa. Trade to celebrate.
Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa. Trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa. Trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa. Trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa. Trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa. Trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa. Trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa. Trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa. Trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa. Trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa. Trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa. Trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa. Trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa. Trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa. Trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa. Trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa. Trade to celebrate.
Buy and sell, buy.
Hey everyone, welcome back. Are you all ready for the non-farm payroll today? I think it is actually going to be a very interesting week. We've actually seen interesting price movement, especially from the Japanese yen. But tonight we're going to be doing the NFP numbers. So in 30 minutes time, we are actually going to be doing that live trade. But before that, we're going to go through some of the basics about the NFP, what it is, and also just a little bit of a discussion into the potential consensus or the expected number for tonight. So hopefully audio is coming through okay. Also, don't forget that Octa is currently doing the holiday special. So between the 4th to the 22nd of December, why do I keep saying November? If you trade for every 2 lots, you're going to get a ticket to the grand prize, which is going to be a draw on the 26th of December for a Rolex and also 5 Apple Watch Hermes version, and also some new Octa merchandises. So don't forget, make sure you do that on your real account though, because demo account doesn't count. All right, so my name is Huda in general. Let's get this started with the news trading session for tonight, which is the non-farm payroll. Just a quick disclaimer, any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility. Market reaction to news can be swift and unpredictable, which leads to higher trading risk and delays in order execution. So be attentive when determining the volume of your transactions and consider all possible risk factors. All right. Bonus for participants, I'm going to show you the promo code to double your deposit bonus after this slide, and then you should have access to the private Telegram channel if you register through email. Okay, so this is the code. You can use Nonfarm 2023 when you're depositing into your Octa trading account. Make sure you use the code to double your deposit bonus. Don't mind the other languages, but this is the code. So if you want to use it, just go to the trading apps, go to your profile, look for promo codes, and make sure you type it in. It's Nonfarm 2023. Okay, so a little bit about myself. You guys are probably bored by this by now. For 2 weeks, we've been doing webinars straight. So my experience has been more than 20 years at this point in time in terms of trading, full-time trading since 2004. So that's about 19 years. I do focus on the Ishimoku Kinko Hill, and I've also been a market analyst as well as a trader mentor since 2007, and been on the news. So if you watch me about 10 years ago or so, maybe up to about 5 years ago, I was still doing regular presentation for Channel News Asia. But yeah, I've been quoted by Associated Press, Australian Financial Review, Bloomberg, Dow Jones Newswire, Reuters, and Times. Yeah, if you go to times.com, you might actually still find my article there. Okay. All right, let's get this started because we do have a lot to talk about. So I do want to talk about the BLS. We want to talk about the NFP, the unemployment rate, the average hourly earnings, and then how to use those economic calendars. And then we'll go through some of the basic non-farm trading strategies that we're actually going to be employing tonight, which we have been employing for the past few months. But yeah, let's start with the Bureau of Labor Statistics. So the Bureau of Labor Statistics is a federal agency in the U.S. that collects and disseminates various data about the U.S. economy and the labor market. Also, its reports includes Consumer Price Index and the Producers Price Index, both of which are considered to be important measures of inflation. So in the labor market data, the most interesting are the number of people employed outside of agriculture or non-farm, as well as the unemployment rate, obviously. But with the BLS, at the beginning of the year, the agency actually publishes a calendar with a release date for the entire year. So if you guys are like, oh, why wasn't the NFP last week? This was actually pre-scheduled at the beginning of the year. Okay. Unemployment data is usually published every first Friday of the month. Obviously, you see that last week it didn't get published. But it really depends if it's a holiday or if it's kind of a leap month, like March. Typically, we get that on the second week as well. I think for this last week, because we have the Thanksgiving holiday, and that's probably why you see this pushback in December as well. All right. with the NFP numbers, inflation data is typically published the week after. It's not really Wednesday. For next week, it's actually going to be on Tuesday, so you make sure the date is right. We're actually going to be doing a live CPI trade on the 12th of December as well. But the inflation number will always come after the labor market data. Okay, so let's talk about the non-farm payroll. I'm going to go through this a little bit quicker than usual because I do want to cover some of the stuff for trading tonight. But the non-farm payroll is basically a report that's monthly, that's published monthly by the U.S. Bureau of Labor Statistics that measures the number of jobs added or lost in the U.S. economy, excluding farm-related jobs, private household employment, and non-profit organizations. So yeah, I guess if you are doing your own business, you don't actually fall into the non-farm payroll. So yeah, you have to be kind of a corporate worker, I guess, for you to actually be part of the NFP numbers. Market analysts and investors usually look for NFP figures above 200,000 as it's seen as a positive sign of a healthy job market. We didn't actually have anything above 200,000 for quite a while now. I think we had one about 2 months ago, and then last month it kind of dipped down a little bit, 250,000. Okay. However, one thing to note here, the interpretation of the NFP data can vary depending on different economic factors and the context in which it is released. So I do want to take some time to explain a little bit about the potential revisions that we might see in the market today. The NFP data is a crucial indicator of the state of the US labor market and can significantly impact financial markets. A figure that falls below market expectations may be viewed negatively, while one that exceeds expectations may be viewed positively. As such, the NFP figures are closely watched by traders and investors, particularly in the forex market, where currencies like the Euro, USD dollar, Japanese yen, or CAD tends to exhibit high volatility in response to the release of the report. Pound USD and Aussie USD is included. I think in terms of forex trading, NFP is probably still one of the most important data where we actually see a lot of volatility. I think the CPI number kind of replaced that by now, but the employment numbers usually does create a lot of volatility in the market. All right. So, as I said, it's very special. There are going to be special non-farm strategies that we are actually going to go through again. After the release during the NFP, there are actually strong changes in quotations and even trend reversals. A lot of the time, when we go with traditional technical analysis, it kind of stopped working for a while, right? It's not like it's permanently disabled or anything like that. No, it does kind of get disrupted for a little bit. So we do have traders that kind of tend to stay away from the NFP numbers. Some traders do actually like the NFP numbers, but again, it's just a matter of preference in terms of your risk profile, I guess. But yeah, also depending on how you actually trade the market. A lot of swing traders and position traders kind of, hedge their position when it comes to NFP releases, or maybe they just be on the sideline until the data is actually released. So it really depends. But we are going to explain a few of the strategies tonight, which is something that we already touched base yesterday during the the trading session, the news trading session, the theory session. All right. So according to the Bureau of Labor Statistics, non-farm employee classifications account for approximately 80% of the business sectors contributing to the GDP. And again, the best assets for non-farm trading would be the Euro, USD dollar, Japanese yen, dollar, Swiss, dollar, Canadian, Aussie, New Zealand. Sorry, not Aussie, New Zealand. New Zealand USD, Aussie USD, and the pound USD, and anything that's related directly to the US dollar. So, with that in mind, if you are looking at Euro yen and the sterling yen, or any other crosses that doesn't have USD, maybe like the Euro pound, Aussie Canadian, Euro Canadian, Euro Swiss, they will be impacted by the NFP, but they won't be impacted directly. Typically, we see a little bit of a delay that happens to them. But sometimes they don't even budge at all. So really, with the US NFP numbers, a lot of them are actually focused to anything that is directly related to the US dollar itself. So if you see anything USD, those are going to be affected by the NFP numbers. All right. So not just the NFP numbers. Tonight we're actually going to be looking at three sets of data. The second one is actually the US unemployment rate. And let me just pause here for a little bit before I explain what the US unemployment rate is. But with any NFP releases, traders are actually looking at three sets of data. All right, sometimes we get a good NFP, but a really bad unemployment. If we see the NFP number increases, but maybe the unemployment also jumps up, that's kind of a mixed bag. It's a little bit of a mixed data, so it might actually cause a little bit of a whipsaw in the market. So unless the NFP number gains, the unemployment drops, we're typically not going to be looking at a one-way directional movement in the US dollar. I think we got that last month. Or maybe 2 months ago, if I'm not mistaken, or was that the CPI? Kind of forgot. Anyway, so the unemployment rate is calculated in percentage and is published at the same time as the NFP numbers. The unemployment rate is the proportion of the labor force that is not currently employed but could be. And in terms of the US unemployment rate, it is calculated based on a survey of approximately 60,000 households. So imagine this. The sampling size for the unemployment rate is actually really small. 60,000 households compared to millions in the US. It doesn't seem fair. But that's the sampling rate that the BLS actually takes. There are a few criteria for someone to be classified as unemployed. A person must meet the following criteria. Obviously, they must be without a job, unemployed, right? They must have actively looked for work in the past 4 weeks, and they must be available to start a job if offered one. Now, point 2 and point 3 basically points to someone that claims the unemployment benefit, right? For you to actually be registered in part of the 60,000 unemployment rate, they typically do claim their unemployment benefits, and that's what we saw this week with the weekly unemployment claims, or pretty much every week. Usually it's actually released on Thursdays, which is last night. That's where we got the weekly unemployment claims, the initial jobless claims, or the weekly unemployment claims. They're the same number. So yeah, if someone is going to be part of the statistics in the unemployment rate, then by criteria, they would actually claim the unemployment benefits as well. So if a person does not meet all these criteria, they're not going to be considered unemployed for the purpose of calculating the unemployment rate. Okay. Hi, just wanted to know if this session will be on gold as well. Yes, we're actually going to take a look at gold as well. All right. So, hey, everyone. Thanks for joining in. I think there's a lot of you guys here right now, but very quiet. I guess that's okay. Chucks, Mary, Torchbearer, welcome. Okay. Anyway, the third set of data is the U.S. average hourly earnings. And the average hourly earnings data is a report released monthly again by the BLS. It's going to be released at the same time as the unemployment rate. It measures the average amount of money earned by workers per hour in the U.S. economy, and the data is collected through surveys of businesses in various industries, and it includes both full-time and part-time employees. In fact, if we actually look at the breakdown, I don't think Economic Calendars is going to show you the breakdown, but if you are able to go to the PLS website, you can actually look at the breakdown in terms of what they get paid and how many percentage is full-time, part-time employees and whatnot. Okay, they even classify by race as well. Okay, so this report is also closely monitored by economists, investors, and traders, as it can actually provide insight into the state of the U.S. economy and its potential impact on inflation. So it might not have a direct impact into the market unless it might be above or below consensus by a huge mile. But we do look at the average hourly earnings data. Typically, if we see a higher hourly earnings, or I would just say it's wages, right? Simple as that. If a country, because if you're going to be looking at the wages number, the UK, for example, right, is actually having a little bit of a problem, and Australia as well, with wage increases. So the salary goes up, and if any salary goes up in a country, typically they have more buying power, and the inflation is going to get adjusted. So inflation typically goes up with it as well. Okay. So a higher than expected growth rate in wages may indicate potential inflationary pressures, which can lead to higher interest rate and currency appreciation, obviously. Conversely, a lower than expected growth rate in wages may indicate weaker inflationary pressures, which can lead to lower interest rates and currency depreciation. So that's just by logic itself. Okay, so as with any economic report, it's important to consider context and other economic indicators when trading the US average hourly earnings data. I think about 80% of traders out there don't actually look at the average hourly earnings. But you know, if we take a look at the fundamentals as a whole, wages numbers is actually really important because it does have an impact into the inflation. So right now, it's still good to pay attention to this one here, because if we have a drop in NFP, for example, maybe an increase in unemployment rate, but if the wages goes up by a lot, typically it kind of ranges at about 0.3, 0.4%. But let's say, you know, just as an example, if it shoots up to 0.7% or maybe 1% change per month, that means a lot more than, you know, any drop in employment numbers. Okay, so just keep that in mind when we look at the average hourly earnings. All right, so I'm going to go through a few chart history, and I'll go through the calendar for today. I do want to discuss the potential revisions that we might face and what are the potential scenarios. So yeah, let's take a look at the NFP numbers. Typically with the NFP numbers, what you're going to be looking at, that red vertical line, that's the release of the NFP numbers, and we are going to be trapping this in a range, right? We're going to be straddling the market, so we're going to create a buy stop and a sell stop. And you can take a look at the reactions in the market. Typically it breaks in one direction, and then it will actually come back to that particular range itself before it bounces off. So there's actually the initial run, and then typically market kind of reverses on itself. Most of the time it does that. Okay, so again, another example, you can see the drop there. The NFP numbers came out, the pound USD drops to the downside, right, in just the first hour, and then it kind of reversed back to the range, and it stays there for quite a bit before, you know, going back to the initial direction. But judging by this one here, it's on a 50-minute time frame, it does take several days for that to happen. Okay, or sometimes we get a little bit of a whip like this one here. So we got sell stop triggered there, and then market kind of fades back. If you didn't close the previous buy stop position, you know, market does come back to that range typically. We just don't know how deep that pullback is actually going to be. For this one here is on the example on the 5-minute time frame. It is actually a little bit of a whipsaw. If we look at it on the early time frame, it is a little bit of a whipsaw. So just keep that in mind with NFP trading. But yeah, typically the patterns are there. You know, these are the NFP numbers that we actually started looking at since April or May. But the patterns are there. You can actually look at it. It breaks and then it kind of fades back into the range. And then this one here in August as well. It kind of breaks to the upside. So let me just give you a little bit of a detailed number here. So let's say on the 7th of August, I've actually put it out there. The previous number was 306,000, which is extremely high. And then the consensus was for a drop to a gain of 225,000. So we're looking not at a drop. This is actually still a monthly gain. Okay, so 306,000 was the number that was released in July for June. The August number is actually for July number. The number that we're looking at today for December is actually November's number. So if we see a positive number, even though it's actually lower than the previous one, that is actually still a gain in the employment sector as well. But if we take a look at this one here, previous number was 306, consensus 225. The actual release was 209, right? So we actually saw that the addition into the labor market was a little bit weaker, despite the unemployment rate dropping from 3.7 to 3.6%. We still see the US dollar weakens, and it's not going to be the case all the time. We need to take a look at it from a context perspective. Okay, so with the August number, the NFP was below consensus, but it was still higher than revision. So we actually do have a little bit of a whipsaw. So we saw the market break to the upside and then comes back down really quickly for the pound USD. And this is going to be the concern that I have for today's number as well. So this is the number for tonight. If we take a look at the previous number, we'll go through the NFP first. For the previous gain, it was 150,000. The consensus for today is actually 180, between 180 to 160,000. This is actually more on the conservative side because I'm taking these numbers from Trading Economics. If you go to other sites, maybe like investing.com or Forex Factory, they might actually have a slightly different consensus. It's just a matter of preference. I do use Trading Economics a lot more because I get a lot more detailed explanation in terms of fundamental analysis. I like using Trading Economics a lot more than Forex Factory, for example. But do keep in mind, sometimes the consensus doesn't quite match, and the consensus does change. Let's say on Monday's Outlook, when I publish the weekly market outlook, you still remember the consensus was actually 189,000, and then we have a little bit of a revision because we have a drop in the JOLTS job opening numbers and whatnot. That number has now come down to about 180,000, so we're going to take a look at that for tonight. Okay, the problem with this one here is that don't expect if the number comes in at 180,000 that it is a guaranteed gain for the US dollar, because we need to take a look at the revision that's done on the previous number. If previous number was revised down to, let's say, 120,000 and the consensus, the actual number comes in at 180,000, that's going to be a huge positive for the US dollar, even though it is as per consensus, because the previous number was revised down from 150 to 120. So we're starting from 120 to 180. That's a gain of 60,000. So with that downward revision, if the consensus comes in at, let's say, 175 or 170,000, it might actually still be good for the US dollar despite the number being below consensus, because we have a downward revision. Conversely, if we have a revision from last month, let's say from 150,000 to 200,000, and then this month it comes in at 180,000, that's actually going to be below last month's gain. Even though it comes out as per consensus, it might actually have a negative impact on the US dollar. So this is actually kind of the difficulty if we look at the NFP numbers, because this year, I believe out of the 11 releases for the NFP numbers, we had about 9 or 10 revisions. So we are actually looking at a lot of revisions from the previous number. Okay, so NFP numbers, there's a lot of revision made to the NFP numbers. So this is probably why the employment numbers are one of the more volatile data releases, because of that revision itself. And that's probably why when you look at the previous NFP releases, kind of just sometimes revert back to the original range that it made. Okay. All right, I need to wrap this up very quickly because I need to move on to setting up our trades. The unemployment rate for tonight is expected to remain stable at 3.9%. So any drop below 3.9%, for example, a drop back down to 3.8 or 3.7%, that would be a surprise positive for the unemployment rate. Okay, so the way we read the NFP numbers and the unemployment rate, they are inversely correlated, the way we look at them. So if the NFP number gains, we expect the unemployment rate to go down, right? If that's the case, NFP goes up, unemployment rate goes down, that's going to be good for the US dollar. If the NFP number goes up, but the unemployment rate goes up with it as well, that's actually a little bit of a mixed data. So we actually want them to go in the opposite direction. Okay, so the average hourly earnings for this month is expected to pick up again from 0.2%, which is a drop last month. I think the drop was actually from 0.4% to 0.2%. That was a 0.2% drop. This month, we're expecting the average hourly earnings to gain back up to 0.3%. Typically, this one here is about right. So we are looking at the range, a median range, about 0.3%. Okay, cool. We good? All right, so I'm going to go through very quickly pre-NFP. Let's not talk about pre-NFP because we're actually kind of running out of time. Let's focus on the straddle strategy. So we actually do want to do a buy and stop above the current range, and that's basically what we want to do. And then after that, we'll go to the next slide where we talk about the fade. But right now, this is the strategy that we talked about last night when we talked about accumulation in the market, and I can show you what's going on in the market right now. It is actually in an accumulation phase. Number one, to take a look at it, I think the RSI is actually pretty flat. The Euro USD is creating a little bit of a range. It's kind of starting to move right now. So I need to be quick. So let's do a buy stop on the Euro USD. Buy stop, I want it to be a little bit higher, maybe about 1.0795. And for the sell stop, I actually do want to have it a little bit lower, right? I don't want to place it too close to where we are right now. I do want to have it a little bit lower, maybe about 1.0755 or below. That would be for the Euro USD. The range is huge. It's about 40 pips for the Euro USD. All right, for the Pound USD, we are okay for a buy stop above here, 1.2587, and a sell stop here on the Pound USD about below 1.2555. Should be about okay. Maybe you want to have it a little bit lower. Yeah, 1.2552. That would be about right for Pound USD. For gold, this one here you need to be a little bit more careful because the range it's kind of a little bit weird if you place it wrong. So this one I actually want to have it a little bit higher for gold. A lot of you guys are probably going to be waiting for this. You do want to have your buy stop above 2035, and your sell stop you actually want to have it below 2020. Okay, so 2020 below 2020 for your sell stop, above 2035 for your buy stop. In fact, I actually do have it a little bit higher, about 2036 and a half here. Give it a little bit more room. The dollar Japanese yen is actually super tricky to trade. I wouldn't trade the dollar Japanese yen during the news release for the NFP. I don't think that's really appropriate. And the reason is for the dollar Japanese yen or any yen crosses, take a look at the hourly movement. We actually have carry trade unwinding that has happened for the past 2 days. And if you want to know why, I can explain that a little bit later after the news releases if we have time. Okay, so same thing with the Euro yen and sterling yen, just be a little bit more careful. The dollar Swiss, this one here, you actually want to have it not too close to where we are, okay? You really want to push it a little bit higher. I would go with the hourly range, and I would actually want to have it above 87.80 level. In terms of the downside, you might want to have it a little bit lower, about 87.30, 87.29. Okay, give it a little bit more room for today. The dollar Canadian as well, you don't want to have it exactly at where we are. You do want to have it, you want to give a little bit more room. I would give a little bit more room to the upside, maybe about 1.35, so close to 1.36. I would have it at 1.36. In terms of downside, I would give it a little bit more room, just slightly below 1.35. Yeah, I'll have it at about 1.3550 actually for the dollar Canadian. All right, so let's recap. The Euro USD, we have a buy stop at 1.0796, very close to 1.08. So if you don't want to push it up at 1.08, that's completely fine. The reason is I can't move it any closer right now because it's a little bit too risky. You can adjust the buy stop a little bit lower if you want to, but it's so close to 1.08, I will actually just have it about 1.08. The Pound USD, 1.25. 80 above 1.2585 is completely fine. Sell stop, you would be looking at about 1.2550 in all honesty, because we are actually looking for a potential break below 1.2550 on the Pound USD as well. Gold, give it a little bit more room. Don't rush in, because if you go on to 50 minutes and let's say you create your sell stop here, what's likely going to happen is the market's just going to take it and it's just going to go up again. So give this one a little bit more room. No rush with gold here. Anything above 2035, it's good for gold for a buy stop. In terms of the sell stop, you really want to have it at about 2020, just slightly below the low that we have here on the range. All right, Euro USD, again for Euro USD, it's actually on the screen, all the others. Buy stop at 1.0795, a sell stop at 1.0755. Yeah, just make sure you have it there. And Pound USD, we are looking at the Pound USD potentially breaking below 1.2550. So that would be the concern that we have on the Pound USD. So be a little bit more careful. Okay. All right, those are the orders placed. News is going to get released anytime soon, so let's take a look at it. Okay, so we got to be quick. If a buy stop is triggered, we need to close out the sell stop. Okay, we got sell Euro USD, Pound USD, so I'm gonna close it out. I'm gonna close out the Pound USD buy stop. We got buy on the dollar Swiss. I need to close out the dollar Swiss buy, and trade is running. I think it's pretty one directional. I'll take a look at the number in a minute once I, distribute everything here. Nonfarm Payroll is 199,000. I don't have a revision as of yet for the previous number, so I think it's still above consensus, which is great. And it's running, so be quick. You might want to move your stop loss to break even right now, or you can feel free to close out of your position. I'm just gonna tally up everything. I'll be quite happy if it goes to about maybe 900. If it drops below 500, I'll just close everything off. Okay. NFP numbers 199. We don't have a revision as of yet. Do we have a revision on the NFP numbers? Revision, I don't think I've seen the revision come in. No mixed data. Unemployment rate is down 3.7%, which is great. Right? Feel free to move your stop loss to break even right now, or I can just close everything out if you want to. Feel free to close everything out if you want. And that's one quick trade. And we're done. At least from my side. If you guys still want to stay in the trade, feel free to move your stop loss to break even. Don't forget, because we haven't talked about the other side of what we have. Let's break down the numbers. I'll give you a little bit more time just to manage your trade for a little bit. Okay, but we'll take a look at the numbers. I don't think we actually have any revision for now. All right, so this could potentially be fading back. Just keep that in mind. Typically, we see one directional movement. Market could just come back, even though the numbers are pretty much okay. So, all right, let's take a look at the numbers. The NFP number is 199. Previous was 150,000 gain. That's a huge positive because the consensus was 180,000. We have about 19,000 gain on top of the consensus. Unemployment rate dropped from 3.9% to 3.7%, which is super good. Wages also went up from 0.2% to 0.4%, beating consensus at 0.3%. No mixed data, was it revised to 150,000? No, 150,000 was the previous number. Double check with a few sources. I typically go with these two numbers. If we don't see this triangle mark, that means there's no revision. So there's no revision to last month's NFP numbers, unemployment rate, or the wages itself. So everything is per consensus. It is what it is. Okay, so I'll get out of my trades. Hopefully you guys managed to get out from your trades. And the reason is we really want to be quick with the initial run. And you're probably going to be looking at, see the price coming back a little bit, because anyone that trades like me just now would have got out from the position, so there's actually a little bit of profit taking happening. So it's attempting to break a certain range, but it's kind of finding it hard to break that. I think Pound USD has cleared off 1.2550. I think we can focus on that. For gold, this is also back below 2020. So yeah, not a bad run. I think we got about $3 on gold. Cool. That's pretty easy. How long does it take? A minute? Yeah, which is good. That's a good way to wrap up year end for the NFP numbers. The dollar yen and the euro yen and the sterling yen, there was a little bit of carry trade unwinding. If you're wondering what it is, dollar Swiss, we got that, and that's fine. There's going to be a little bit of a resistance at 0.88, so just keep that in mind. So if you go on the early time frame, the 0.88 level is a psychological price level that could actually limit further progress on the dollar Swiss. Lovely end of the week. Sure thing. I think it's a great NFP for the last NFP for 2023. I think this is an awesome trade. Very easy, very painless. We don't actually have a lot of whipsaw, which I think is great. Anyway, the dollar yen and the euro yen, the reason why I say, stay clear of this one here, because if it does break to the upside, there's a lot of risk. Bank of Japan has actually shown intent that they're actually going to be moving away from negative interest rates. So we do have what we call a carry trade unwinding. That's people shorting the yen for year on year, but there's a little bit of that unwinding, and that's probably why you see that drop. And that drop is actually huge. We're talking about anything about 5 yen. But yeah, anyone that still stays in the trade, if you want to move your stop loss to break even, feel free. If you want to get out, feel free. Just make sure you have your stop loss, okay? I would move it to break even. I think we should have enough momentum to continue for this one to push down. Is it a best record timer? I don't think so. Our best record timer was about 40 seconds. It was 50 seconds and it was 40 seconds. It's still one of the best. I think it was still one of the top 3. Okay. But yeah, I'll go in and focus on the analysis. Gold is still going on very strong. Pressure is still on for gold. If you guys still stay on for gold, I would move your stop loss to break even. You might actually want to lock in some of the profits to maybe about 2018. Yeah, just around there, 2018, 2019. You might actually want to lock it there. But it should be one directional. So I'm actually going to switch into trading view and let's take a look at it. Very nice trade. Capture 72 pips on pound USD. Awesome stuff. All right. Okay, we good? All right, we're not done with the session. So let me just go back to this one. Maybe I'll give it a minute. If you guys have any questions regarding anything that we just did, feel free to fire away. But we're going to move on to the fade. I don't know if you're going to get a fade, but we'll take a look at it from a technical perspective. We do actually have a fade. But yeah, I'm just going to give a minute to everyone just to settle your trades before we actually go on. Will it break the uptrend of gold? I don't know. Let's take a look at it. I don't think gold is technically in an uptrend. Monday's move was really a concern, and I think I'll publish it on the Outlook. You shouldn't be going long on gold on Monday. Would it have any effect on XTI? It's a different market, but would it make any sentiment changing? That's a very good question. So we'll take a look at the XTI. So at the very least, we're done with the first 5 minutes. You're not done with the 15 minutes yet. We're way too early. Okay, but let's take a look at XTI. I actually do want to know too for oil, how's that going to have an impact. But yeah, if you guys have anything you guys want me to take a look at, feel free to just fire away. No, I don't think there's anything with oil. I think oil was, I think I mentioned this on the Outlook. It's going to creep to about $70. That's where we are. We're about at $70. I don't think we see any significant changes in oil. At least I don't see that on the hourly time frame as of yet. All right, let's talk about gold because I think you guys are super curious about gold. And the reason why I would say, be careful on Mondays, because take a look at that spike. It's so ridiculous because that spike was way higher than May 23rd spike in terms of size, right? In fact, it actually mimics that. We have a long wick to the upside, and then we have kind of a smaller body, maybe about 1/3 of it. On May 2023, when it actually breaks a new high, it only, it pushes up about 29 from the open itself. But this one here, in terms of the wick, the distance, it's more like triple. So that was a super major concern for gold. Now, in terms of gold, is it maintaining an uptrend? At this point in time, we do not know yet until we actually break below 2009. So if we have a daily close below 2009, we could actually potentially see a much sharper drop towards 1950. So again, we already discussed this in the Outlook this week. Now, will pound USD now goes up because there's a support at 1.2550? That's actually a very interesting question because that's something I actually want to take a look at right now. Can we actually fade this? We do have support at 1.2550. We actually break that. This is actually going to be a little bit tough. But let me go back to the slide for a little bit. Okay, So obviously we don't have time to talk about pre-NFP trading, right? Pre-NFP trading is if you want to trade before NFP releases. Maybe some people actually close out a position before the actual NFP release. What we did was the straddle strategy. So the straddle strategy, let me just explain it now because I have time to explain it. Involved placing two pending orders, a buy stop and a sell stop above and below the current market price just before the NFP release. That way you can potentially profit from a strong price movement in either direction. And once one of the orders is triggered, you need to immediately cancel the other order to avoid being exposed to further market fluctuations. That's basically what we just did today. Now, historically, what happened with the NFP is it bursts in one direction and then immediately comes back. And typically it comes back within the first 1 hour, right? So everything, once the dust settled, and the dust will settle after 5 minutes. So we're past 5 minutes, and that's why I don't want to stay in that trade for too long. Because if I stay in the trade for too long, maybe in exception for gold, maybe the only one that would make me money would be gold. But the Euro USD and Pound USD would kind of flip back to the initial entry that we have. Now, that's where the fade comes in. This strategy basically involves waiting for the NFP release and observing the initial market reaction. Once the initial volatility subsides, so I'm just waiting for the next 5 minutes to see if we can actually buy in to actually fade again on the Euro USD or the Pound USD maybe. We want to look for opportunities to trade against the initial move. So the fade is actually super risky, right? Because the fade is basically working on the assumption that the market will actually not revert. It would actually normalize itself, because the idea is that the market often overreacts to the NFP data, and that a retracement, sometimes a reversal, is likely to follow. Typically just a retracement. Okay. The last one is obviously post-NFP trading. So instead of trading during the release, wait for the market to digest the NFP data. If you are doing this, then you might actually want to wait until the candle close to even start looking at analyzing the market. But yeah, swing traders and position traders basically do this. They would actually wait for the post-NFP trades. When I do my trades, the swing trades and position trades, I actually wait until Monday. Asian session kicks in. Then I actually start figuring out my positions, and I'll actually open it during the European session. So no rush for me. I have the whole weekend to kind of figure out what it is, okay? But regardless of the strategy you choose, you need to keep the following tips in mind. You need to manage your risk. Always use appropriate stop loss orders. Never risk more than a small percentage of your trading capital on a single trade, just in case if you blow it up, you could actually blow up your account really easily as well. So stay informed. Keep track of economic news, forecasts, and market sentiments leading up to the NFP release to make better informed trading decisions. And also be flexible. Be prepared to adopt your strategy based on the actual NFP data and the market's reaction to it. Okay, so if we get it wrong, for example, if we got whipsawed, buy stop and sell stop triggered at the same time, you know, I might want to cut my loss instead of figuring out how am I gonna turn that around. Okay, so it looks like the fade is already happening right now, so I don't think there's any point on trading the fade. But let's take a look at the Euro USD. If you didn't get out, you would be negative right now. The Pound USD, you would be negative right now. Gold, you would actually also be in negative by about $1 as well. So this is why we kind of just get in and get out as soon as we can. I don't want to stay too long in the market. So we could actually potentially fade this. So just keep that in mind. We're just waiting for 2 more minutes to potentially fade the move, because we are actually going to be doing this on the 50-minute time frame. All right. So what's the floor that we have? 1.2550. Yeah. So 1.2550, we are actually back above 1.2550 on the Pound USD, and this is actually a point of contest, I guess, because if you take a look at it on the daily time frame, it means it actually bounces off a very important support level or key level. So Pound USD, if it closes like this on the 50-minute time frame or maybe the hourly time frame, as long as it closes above 1.2550, we might actually consider going long on the Pound USD. The reason being is on the Pound USD, the Ichimoku cloud is actually very thin for tonight. It would be Monday. So yeah, until about markets close, exactly at about markets close, probably don't have enough room for it. How does the NFP data influence the Fed rate decision? Not by a lot, because this is the Fed actually wants the labor market to kind of loosen up a little bit, because if the labor market is still good, the push for inflation could still be there. So in a sense, the NFP actually wants the labor market to kind of cool down a little bit. Okay. All right, so pound USD is actually showing a very interesting reaction in the market. We actually see a very sharp bounce. This is beyond the fade, because I think we already went past the range that we have on the pound USD. Let me just take a look at this. Yeah, I think we actually went past beyond the range. So on the 15-minute time frame, I actually want to have. I would wait for a bit. Don't jump in first. Let me just get my RSI. At the very least, I need my RSI. All right, RSI still points to the downside, so I think it doubles up. Okay, let me get rid of this one. I don't need that. Okay, so I would actually wait for a bit. If you want to try out the pound USD, you might want to pick it up about 1.2525 if you want to create a limit order. But other than that, I wouldn't be touching the pound USD at the current state, because even though it's still above 1.2550, that level needs a confirmation on the hourly time frame. So if you're thinking of buying the pound USD, I wouldn't do the fade at this point in time. I think it's a little bit too late to look at the fade, because we already fade back into the initial range. So I don't think we can fade it at this point in time. But if the hourly maintains a position above 1.2550, we need to consider that 1.2550 will now be quite an order block at that particular price level. Really depends on the hourly close, but if you're thinking on creating a limit order, I'll just give you an example on the pound USD first, and I'll move on to the Euro USD. I do have a little bit of an idea on this one here. I would be looking at a buy limit at about 1.2525. About 1.2525, right? And with this in mind, you need to have your stop loss not too far. I would actually have it about 1.2490, right? I wouldn't want to have it anywhere beyond 1.2490 on. Okay. Yeah, 1.2490, and my take profit would actually fall at about 1.26. Okay. Oh, I'm on the wrong chart. Oh, sorry. That's a sell top on the raw Canadian that I haven't changed. Okay, so let's modify this one here. 1.2490 if you're thinking of going long at 1.2525, that's completely fine. Just make sure your stop losses are not too far away, about 25-35 pips tops, nothing more. In terms of take profit level, you probably want to have it at 1.26. Okay, this is an okay trade, because we still look at a potential 1-to-2 risk reward ratio on the pound USD, but if we didn't get that and price goes beyond 1.26, just cancel the trade, because it becomes pointless at that point. Okay, if you're thinking of jumping in now, if you want to buy in right now, your stop loss would actually be down here, so just keep that in mind. I don't like this if you're buying in right now, so I'm just going to close it out. I would still prefer a buy limit a little bit lower if you want to jump in tonight. If not, wait for the hourly time frame to kind of closes like this above 1.2550, but you got to think about it, right? Because if I were to go with whatever it is, then my stop loss is actually going to be pretty far, because I need to have it below that low there, and that's the reason why I actually want to pick it up a little bit lower, about 1.2525, and that way if you take a look at my stop loss and the risk reward ratio, it does make sense a lot more than if I were to just jump in the market. You'll get about 1-to-2 risk reward ratio, at least on a pound USD. So yeah, don't get too giddy on this one. Just jump straight in on the pound USD. There's a lot of risk involved, because if you take a look at the stop loss placement, it's quite far. We are looking at about, if you jump in right now, your stop loss would be at about 50 pips. I don't think it's worth it. Okay, so yeah, Pound USD, if you want to wait at about 1.2525, then I'll wait there if price managed to go back down there again. But make sure your stop loss doesn't exceed 1.2490. Because if we lose 1.25, we just gone. The reason why we give it about 10 pips range, just in case there's a liquidity grab that happened at 1.25 and price bounces off, because 1.25 is still going to be a key level, which is previous break of structure level, which was a previous high in the market. Okay, so that's pound USD. Euro USD might be in a similar situation, but the key level on the Euro USD is actually going to be at 1.25. Sorry, 1.0750, just about here. Right. So that's the key level for the Euro USD. Make sure there's no hourly close below 1.0750. The thing is, right, this is Friday. The thin Ichimoku cloud that you see on the hourly time frame, that actually falls on Monday's range, so it's actually not going to be today's range. Okay, cool. That was easy. Overall, I think it was pretty easy. Dollar Japanese yen, be very careful, as I say, with the dollar Japanese yen, even though it goes up. I think what goes on with the Japanese parliament today, where the Bank of Japan actually announces, and the wording that they use is not if or anything like that, but they say once they move away from negative rate, then they're actually going to move interest rate to 0.25 and potentially 0.5. Now this would end, I think, about a decade or more than a decade of negative interest rate for Japan. Despite the data is bullish for the dollar, why are you suggesting to sell the US dollar? I think we actually we actually bought in the US dollar. So we actually sold euro and pound. But if you're looking at the current technical, this is it's actually more based on the range that we have. Look, the numbers that we have, if we take a look at 199, it's still below 200,000, right? Even though it's still a good surprise. I think we still need to watch out for the key levels, because technically on the pound USD, for example, it's still in an uptrend. We're actually just pulling back a little bit. And the levels that price just bounced off, which is 1.2550 by nature, would confirm that the pound USD, in terms of demand, there's still demand for pound USD. So again, with news number, I don't think it's a matter of context or anything like that, but we also need to take a look at it from a technical perspective. During news releases, yeah, sure, technical analysis kind of be thrown out of the window, but once the dust settle, we still need to analyze the market. And looking at the market structure on the pound USD, by logic and by right, it's still going to be above 1.2550 still if we don't actually have a close below that. If price closes like this, it would be hectic for me. Why? What would it be hectic? We're done. So yeah, I prefer a buy on the pound USD, just for the sake of a little bit more of a bounce or anything like that. Plus, the reason is I don't really want to sell into this, because the initial reaction is that we saw market kind of fades back too quickly. It happens within the first 30 minutes, right? The first 50 minutes, actually, we actually saw the fade happen. Typically, if it's so good for the US dollar, you shouldn't be looking at a fade that quickly. If the fade happens after 30 minutes, that's okay. But this all happens in the first 50 minutes window, so cause of concern as well. I think there's still demand in the market. Plus, it's Friday. There's a lot of position adjustments. Okay. Cool. That was easy. Seriously, one of the fastest trade as well. I wouldn't say it's the fastest. It still falls into top 3 fastest trade that we did. All right. So forget the slides. We done past that. We already analyzed it before the data get released. We also traded before after the data is released. We got one trade on the pound USD, Euro USD. If you want to make sure when it bounces off. If it doesn't have an hourly close below 1.0750, but if right, if the hourly close is below 1.0750, do not buy Euro USD. If the hourly close drops down below 1.2550 for the pound USD, do not buy pound USD. You need to cancel this pending order, okay? Because we are now looking at this key levels to potentially hold the market. The candle is going to close in about 6 minutes time. So the next 6 minutes, you're actually going to be looking at a lot of movement on these two currencies, on the Euro USD as well as the Pound USD. The reason being, sellers are actually attempting to break past 1.2550 in the next 6 minutes. If they manage to push it just slightly below that level, then a lot of the bulls out there, people that might look at, oh yeah, 1.2550 still holds, will cancel their buy trades because no point, because we actually have a confirmed close below the key levels, at least on the hourly time frame. You have a short position on pound and euro since 2 days ago. You should be happy, you know. Be grateful for what it is. All right, so let's see what happens here on a 50-minute time frame. It's still attempting to. This is going to be a close call because we are actually going to be closing soon in about 5 minutes time. So what happens there about 1.2550? The Euro USD should be attempting to break 1.0750 as well. So you should be looking at a very similar scenario. If we do have that close below, then cancel out any pending orders that you have for a buy in Euro USD. I would just sit it out. No point jumping into it. The reason being is if you short it at the current price level or any break below 1.0750, you have to make do with a minimum stop loss of maybe about 40 pips or about 50 pips to the upside as well. Since of target level, it's still a little bit unclear because we can only target about 1.07 on the Euro USD. Pound USD also very similar. If it does close below 1.2550, the best you can do is probably target 1.25. Your stop loss would be about 1.26. So it's going to be very far. Yeah, be grateful, man. Yeah, if you guys are new here, Albert has been following my webinars for a while, and it is good. It's just that it gets too greedy at times. So yeah, just be grateful with what you have. The news is good for the US dollar but bounces quickly. Is it market maker? No, not really. Typically like what we just did, right? We jump in and then we got out. It's just simple logic behind it. But yeah, I wouldn't say it's market maker, or I don't like to say market maker, but because everyone is a market maker, right? But it wouldn't be institutional as well, because institutional would just accumulate position about 1.2550. It's too close of a call for institution to jump in at this particular price level, but we'll see. I think this is pretty much well defended. I'm not sure if there's actually a pound expiry, option expiry that we have today. That's a lot. I don't think so. But on the Euro USD, where is it? Here we go. At least on the Euro USD, if we take a look at it, today's price movement kind of makes sense. It still trades below that option expiry that we talked about yesterday, 1.08. And it's only about 892 million, not by a lot, really. But yeah, we'll see what happens. All right, cool. Here's the code again if you want to use it. It's Nonfarm 2023. I think we're wrapping up for today. If you have any questions, feel free to ask. I've already been answering some of the questions there. But yeah, it's a good NFP for 2023. We got one more to go, which is CPI numbers. That's going to be next Tuesday, right? So hang in there. If you missed out today, we're still going to be doing this sort of thing on next Tuesday. I'm also going to break down the potential inflation numbers. So just keep an eye out on the weekly market outlook. I will discuss that on the weekly market outlook. So at least from a positioning logic, you would have something by Monday. Other than that, we are still going to be doing a live trade on Tuesday anyway. So what's next? CPI number, which is going to be on the 12th, right? And I'm going to be streaming from a new place on next week. So yeah, keep you guys surprised. Keep you guys guessing where I'm going to be next week. I'm actually going to be somewhere else for the next 3 weeks. But yeah. So next Tuesday is going to be CPI numbers. We're going to be doing it at the same time as we're doing this webinar. So we'll talk about some of the theory behind the CPI number, what we're going to be looking for, because I need to explain a little bit, if you guys are new, about the difference between core inflation and the headline inflation number, and how they could actually become a mixed number as well. So just keep that in mind. All right, everyone. My goal has been accumulating for the week. Is it going to move on Friday? I think it's already started moving, but I don't know how confirmed that is. Okay, but look, it's been a fantastic NFP session today. Good luck with your trades. Hope you guys have a fantastic weekend. I'll see you on Monday for the outlook. Other than that, I'll see you guys on Tuesday for the live CPI. Good luck with your trades. Have a fantastic weekend ahead.